hot trend taking hold of Wall Street as investors show some love to the most hated stocks this year. Let's get down to Bob Pisani at the New York Stock Exchange with the details. Hey, Bob.
Hello, Melissa. You know, some high short interest stocks are soaring this year. Now, take a look here. Bed Bath & Beyond, AMC Entertainment, Boston Beer, Snap, Mattel, they'll all have short interest between 19 and 32%. But they're soaring this year. Now, short interest is the number of shares sold short divided by the shares outstanding. It's often used as a sort of quick and dirty way to see which stocks are most heavily shorted. High short interest is typically an indication of bearish sentiment. And in general, anything above 20%, very much on the high side. So when you see stocks that start moving up on relatively high short positions, that may be a sign of a short squeeze where the sellers are covering their short positions, typically because there is positive news events maybe, or just sometimes because the overall market experiences a big valuation spurt, which, by the way, is exactly what happened in January and most of February. Snap, for example, is up more than 80% this year. Typically, the higher the short interest ratio, the bigger potential for a short squeeze. Now, one thing these companies have in common is that they're all consumer names. Companies in the beer business, some in the movie business. Be careful here. You have to be very careful interpreting results with heavily shorted stocks. There are plenty of weak companies that have rallied because the market moved up and they get helped by short squeezes, but then they fall apart again right after the rally. And here's another thing to bear in mind. These stocks all popped after their earnings announcements, and shorts now seem to be betting that the rallies won't last. Maybe we'll see. Still, many traders use high short interest as a contrarian indicator, betting that if everybody's selling the stock, it's got a good chance of moving up. Bottom line, Melissa, and you know this, being a short seller is a really tough business. Back to you.
Certainly is, Bob. Thank you, Bob Pisani at the NYSE. Well, this feels like a perfect time to play a little.
What kind of game?
Trade it.
Oh.
That's right.
Yeah.
Trade it or fade it. All right,
rather?
let's kick things off with a Snap. It's up 81%. So Grasso, trade it or fade it.
I'm going to start off saying trade it. Let's get that animation out of the way. And we all know the negative headlines or the headwinds for Snap. I think that this is all about positioning. No different than the overall market. A little more extreme with this one. I think that they're going to be able to grow revenues. Ad space, they're selling it. It's over $1 billion they've made.
So let me get this out of the way. Fade it, for sure. And again, I think it is because sentiment is so poor that you've had this snap in the stock. So Bob talked about short interest. I care about the fact that, you know, there was cartwheels being done that the company's going to lose $150 million in free cash flow, or have $150 million loss of free cash flow this year versus $165 million. I don't see this company making money anytime soon. We see stabilization in their growth metrics. Stabilization. That's not growth. That's not excitement. They're not making money.
And they had an opportunity with Facebook losing its mojo, having all this regulatory problems. If Facebook, as the analyst that we talked about at the top of the show, is coming out of that, then Snap could be in trouble if they're back focused on that. So I'm a fader as well.
Next up, BK.
Oh, right back to me.
Yeah, right back
nice.
to you. Trading or fading Boston Beer?
Well, as much as I like beer, I do have to fade this one. And it's not so much I have anything bad to say against Boston Beer, but it's more of the market call on this, right? We've had a tremendous run up in this name. The market has had a tremendous run up. I just think this name gets hurt, just like everything else, if the market's going down, which is my view at this point.
I thought what was going wrong with the AB InBev story was maybe what is working in favor of Boston Beer in terms of the smaller craft beer.
But I was going to ask about the cannabis story. Is that a potential headwind?
Beer's my department. Cannabis is Tim.
Well, and beer's not my department. I quit for 47 days. But bottom line here is I think you've got a dynamic where you are seeing slowing top line for all the major beer companies. Craft beer has been outperforming. This company had their day in the sun. I think the time to buy the growth, the multiple's not cheap. I fade it.
All right, moving on. Mattel, the toy maker, up 46% so far this year. So, Tim, trading or fading?
So, by the way, all the things I've said about these other companies that I've faded, people can throw right back at me right now on Mattel. Barbie, Hot Wheels, not so good. I do think that the guidance that they gave recently that knocked the stock down from loftier highs was some misunderstanding about the multi-year turnaround, really, in this company. I think they say they can get back to 15% operating margins. I think they kind of can. I think the comps right now with Jurassic World and whatnot are really tough for them. But I trade it.
Yeah, I would be a fader of this one. So. For the reasons that Tim just talked about, the forecast. So if their guidance is overweighing whatever revenue or whatever sales they had in December that was favorable, the fact that they still survived after Toys R Us went out, I think that you got to go with what the writing on the wall is telling you. Sell it.
All right. Last but not least, Karen.
Yeah.
Bed Bath & Beyond, trading or fading?
I actually would trade it. Yeah, I think that maybe it's perhaps turned. The reason that it's up so much this year is that it was down so much the year before, right? So it's a bounce back of a little bit of what they lost prior to that. I don't look at it as a really, a huge outperformance. And just maybe things have turned. People called, said they're dead. We've seen the Amazon effect not actually kill things that we thought would be killed, right? Like a Foot Locker, like the auto parts retailers. So, I think there are signs of hope here. The other thing it has going for it is they have some time in terms of their debt. There's nothing coming due shortly. They do have a balance sheet that is okay.
I'm getting fewer 20% off coupons myself.
Are you?
That's a good sign.
That
should be
right. It's a good sign for the stock.
So you're
bad sign
trading
for
it
me.
also.
Yeah.
I have no.
you
I'm
have
just
no
making
trade.
observation.
Right.
Observation here.
So, look, as much as I love scented candles and Guy loves potpourri, I'm going to fade this one because I do think that they've got an Amazon problem. And I think that the multiple at this point after snapping back still isn't cheap.